We can start. Excellent. Okay, so good morning everybody and welcome to this webinar with FX Street on this wonderful Friday morning. I hope you've all had a good summer so far, gone on your holidays and you're kind of getting ready to get back into the markets when September rolls around and we get some volatility back into the markets. What we're going to do in today's session is we're going to follow on from our last session. So in the last one we talked about entries and exits, and what to look for in a trade and all of that kind of good stuff. But we did it from quite a theoretical perspective. And today's webinar, we're going to look at it more from a live perspective. So we're going to go over live charts, look at things that have been setting up or have set up, look at why we would look to take them, why maybe we passed up on them, and all of that kind of good stuff, just to really show you what you need to be looking for if you want to be successful in this industry. Okay? So before we start, the regular disclaimer, which is to say that the content of this webinar is not investment advice, and particularly this sort of a webinar here, because we are going to be talking about live charts. So even if we discuss trade setups and all of that kind of good stuff, you still need to go away and do your own analysis and make your own decisions. This is in no way investment advice whatsoever. Okay? Quick little bit about myself. Co-founder of a website called traderscorner-online.com or traderscorner.co.uk, whichever you prefer. Been trading the markets for going on 9 years now. We've co-authored various articles. When I say co-authored, it's my brother and I do it together. We teach people to trade, all of the regular kind of stuff there. If you have any questions, you can always drop us an email or visit us on our Facebook page. Okay, now we have all of that out of the way. Let me get rid of this for a second, and let's jump onto the markets. Now, what I'm going to start with are a few of the setups that I've been looking at over the past couple of weeks, days, and all of that. Talk you through why we took them, why we haven't taken some, and really get you into the right mindset. So ultimately, we're going to start with some trades that we didn't take, and the reason that we haven't taken them. Now, as you guys know, or if you've watched some of our webinars before, we like trading range charts. All right, and this is my beloved range chart in front of you here. Now, this was a trade that we did take back here. Over around this sort of area over here. We took this a while back. The market then came down and it gave us another few setups over here. Now we haven't taken these setups and I want to show you exactly why. Okay, so if I minimize this for a second, the setups that we got given were these over here. Okay, now in the last one, we talked about how important support and resistance is. Okay, we said that support and resistance is very, very important. It's almost like our primary trading tool. So even though you have the various entries and exits techniques that we've shown you, it still all does come down to support and resistance. Now, someone tell me what's the difference between this opportunity up here and the opportunity that we got to go short down here. Taking a look at these charts here. Anybody know? What am I doing? I'm trading into massive support, okay, or previous resistance becomes support. Look at this level here. This is a previous high over there, back on the 31st of January this year. The market came up to that high, and it got rejected. The market got sold off, came through it, came back to it, treated it as support, came back down, broke through the support. But look at the reaction. It spent, less than a day below that support level, and then that all got brought back up. The market comes back down to that support level, it rejects it. So the next time it comes down to that level, it doesn't make any sense whatsoever to try and take a sell trade into this level here. It's not like we've got 100 pips on the table. We've got 30, 40, 50 pips there. The entry is actually down here. So you would have, maybe 20, 30 pips before the support level, and it just doesn't make any sense. So when you look at it from a global perspective, and you look at the big picture, it doesn't really make too much sense to be looking to go short at this level here, because as soon as you go short, what are you trading into? You're trading into these buyers over here, the buyers over here, the buyers over here, the buyers over there. Okay, and obviously the market participants will go way, way back. When it came up to that level, look at the way it got sold off from. So it's a significant level. It's a level that the markets are looking at. And for that reason, that's not a great trade to take. You've got to weigh up all of your trades. When you are looking to enter the market, you've got to weigh up all of the options and decide for yourself and ultimately ask yourself the question, which is, if I get stopped out of this trade, okay, if I enter now, and in a day's time or 2 days' time or whenever, if I get stopped out of the trade, am I going to be able to look back at this chart and pick reasons why I shouldn't get into the trade? And I'm not talking about, little reasons, because we can always find a reason not to trade. I'm talking about the big ones, like you look at this here, and this is a glaring support level. Why would you ever take the trade into that support there? Does that make sense to you guys? Yeah, no? All right, so you've got to start to be picky about your trade. And that's a question that I ask myself. So when I'm looking to enter a trade, I look at it, and I look at the merits of the trade, and then I say, okay, so if I get into the trade right now and I get stopped out, am I going to be annoyed? Am I going to be wound up? Am I going to be able to come back and look at the chart and find a reason why I shouldn't have taken the trade? And, so like a fundamental reason like that. And that's how we need to go about our trade. So that's an example of one that you shouldn't have taken. Okay, now we'll go and look at some of the setups that we've been looking at over the past couple of weeks. We actually missed one, which I'll show you the other day, but it was a good setup all the same. The first one is this one here. This is the pound dollar, okay? This setup over here was a great setup. I'll show you it on the range chart as well, so you can see what we're looking at here. Okay. So this setup here on the range chart, the entry was over here at about 9:30, 10 o'clock in the morning, all right? We take our entries off the range chart. However, we're looking for our locations to take the trades off of the time-based charts. So looking at the daily chart here, I can see that this level here that the market pulled back to was a nice level of previous resistance, support in the past. If you go back there, you can see the market plays with this level a great deal, okay? So the moment that the market breaks through that level, which is on this huge candle up over here, the market then rallies up and then starts to pull back a little bit. Now, looking at the price action of this trade, what do we have going for it? Well, first of all, the candles in the direction of the trend are big-bodied, nice candles. The pullback candles are really, really small. It doesn't look like there's a lot of momentum going against this previous move here. So when the market gets back to this previous level of resistance and was support in the past, if we get our trigger to enter this particular, at this level here, we want to be getting involved in that market there. And that's exactly what we got. So if we look at our chart, our 45 range chart, the market comes back to that level, we get our signal to enter. We've got no reason not to get into that trade. It's an absolutely fantastic trade. If you take a look, let's get rid of it again. Look at the level. It's all about the levels here. Okay, close to the resistance, would you short here? No, personally we wouldn't short. And the reason for that is we are trend traders. However, if you feel like you want to short it, I would wait for it to get up to the extreme, so around the 157.63 level, and then I'd look for a bounce off of that level. I mean, you can pretty much bet your bottom dollar that when it does get up to that level, it will have some sort of a reaction. Whether it's a big one or not, I don't know. No one knows. But there will be a reaction to this level. However, we wouldn't short against it because, as you said, it's against the trend. So for us, we wouldn't take that particular trade. But as I said, not to put you off of the trade. So ultimately, what are we saying here? Support and resistance rules the day. Support and resistance is what it's all about. If we can wait for the setup where the market pulls back to levels of support and resistance, we are happy to take those trades. So looking forward in the pound, what do we want to happen? Where's the next trade? Ideally, what I would be looking to happen is for the market to pull up to sort of around the 157.55 level, so around that top there, and then start to pull back. And if it can pull back to somewhere around the 155 level, i.e. to this sort of level here, this previous level, so 155.74 is that support, that resistance as well, then I'd be looking to take a long. However, it'd be slightly risky, obviously, because if we take it, it would be into this extreme high over there. But yeah, that's the plan for this trade. So I'm waiting for it to pull up to that level, test that level, pull back a little bit, okay, pull back to a previous level of resistance or support, and then take the trade. And hopefully on the second time of asking, it will then smash through this level and give us some momentum up to these lows here, or certainly if it gets above those lows, these lows up there, and then ultimately up towards the highs, which is where it sold off from in January. Make sense to you all? Okay. So the pound franc, the next trade that we're looking at here. So from a daily perspective, I couldn't really see much going for this trade. Okay, from a daily perspective, it's in the midst of nowhere. However, from a 4-hourly perspective, we do have a nice little bit of a trend moving to the upside. Now, what I'm looking for in this trade right here, I'm not looking to take it right now, but if the market can pull back to this level here, the 144.12 level, which is the previous level of resistance, which hopefully will be treated as support. You can see it's treated as a bit of support here. So when the market broke through that level and came back to it, you then found buys at this particular moment here. So if the market can come back to that level again, and then give us a nice setup to go long, I will be all over that. As I said, the one bad thing about this trade is it doesn't have a lot going for it from a daily perspective. So we don't have the daily trend with us. It's kind of almost in consolidation. You know, if you asked me to trade the daily chart right now, I wouldn't have a clue what to do. But looking at it from a 4-hour perspective, so going a little bit more short term, I don't see why we can't start looking to get long around here at 144.10. Okay? So a few more that I've got in my radar, my sights for the moment, and then what I'll do is I'll open up the floor for you guys to ask questions on any trades that you may be looking at. Okay. So here's another one. We actually didn't manage to get into this one here, but it was a good setup all the same. Now, from a daily perspective, what do we have going for us or not going for us? Take a look here. We've got support at that level there, okay? So we've got support at 91.64. It's not right on it like it was with the Euro New Zealand, which is pretty much trading directly into it. However, that is something that you'd want to keep an eye on. So when the market gets down to this level here, you'd want to take some money off of the table, all right? What we have going for the trade is that the 4-hourly trend is down. It looks like the market wants to test these lows here. Right, the market's pulled back to a previous level of resistance. You get your signal to enter here. Whether this, this one still hasn't come to its center, whether it makes you money or not in the long run, we don't know. This might just completely turn around and smash through your stop, which should be above that level there. However, looking at the 45 range perspective, this is why I like this trade. It is an absolutely picture perfect range chart setup. You've got massive momentum to the downside. You've got this nice pullback, a nice orderly pullback, followed by a very, very clear signal to get short there. When you get short there, we've got down to the lows, which are these guys over there, 91.32. So you basically got about 170, 180 pips on the table before you get to the lows, which is why I wouldn't mind taking it. Whereas with the Euro New Zealand, as we're talking about just now, we had about 20 pips. Okay, so that's the difference there. So yes, we are looking at trading into a support level, but the support level is a little ways off yet. Okay? Does that make sense to you guys? Excellent. Obviously, it's too late to take that now. The trade has gone, but that was one that we said was a decent setup. And then we've got the CAD franc, which I'll pull up now, which is pretty much a carbon copy of the dollar franc, only you aren't trading directly into the lows, which is quite nice. For the CAD franc, you can see we've got the nice swings to the downside. We then get a nice pullback to a previous level of support over here. So support, support, support. Support's over here. The market breaks through it. Look at the rejection to that level. You know, it's a very, very big level. Resistance over here. Support over there. You just can't ignore this particular trade because it's trading from such a big level there. Then you get a nice pullback on the daily. And this is one that you could actually look to be taking because from a price action perspective hasn't completely triggered yet. It's in the midst of doing it right now. But it hasn't triggered yet. If you remember back to our last one, this is a bearish engulfing candle. If you then get a break below there, you'd then be looking to enter to the short side with your stop above on the long. Again, not investment advice. Okay, so I'm just talking you through the techniques I showed you in the last one and how you would use them. For this particular one here, you would certainly be looking to go short from this level, bearing in mind just how big a level it is, the fact that you've got a bearish engulfing candle there, all looks to be a good trade. If we then look at the 45 range chart, you'll see that it's actually already triggered there. As you can see, you get a nice opportunity to get short there, and we're looking to trade it down to around the 88.40. Okay? Now, as sad as it seems, of all of the 30 pairs that I monitor and watch, they are the only ones currently that have presented an opportunity in the last day or two or look like they could present an opportunity in the days to come. Okay, it is August, it's the summer months, and that should be a lesson to you in the sense that I'm not trying to trade everything. I'm only trying to trade things that make sense, that the entries make sense to me. So, are there any questions on that at all? Would you like me to analyze any other pairs? The euro dollar. Let's take a look. I'll bring that up. Give us just a second. So, the euro dollar. Okay, from my perspective, daily is kind of a mess. Don't really know where it's going. We're trading up towards these highs at 134.04, so that's going to be in my radar. It's been rejected from there once. Look at the move. It's come up there again, got rejected. If it can break above here, all right, so I would be looking for it to break above this particular level here and then pull back and hold on that level. Then I'd be looking to go long. I couldn't go short here because I don't see a trend in place. All right, so ultimately on the euro dollar, I'm looking at this level here. I'm thinking I can't be trading into it. If the market gets above it and then pulls back, I'm going to be all over it. I'm going to be taking that long 100% if I get the signal to enter. Would you guys agree with that? Yes, Trav, I do trade lower time frames. I trade my range charts. I trade very, very short term as well. When I have a similar entry on two pairs, each featuring the same currency, e.g. the franc, do you halve your position size as a trade? Yes, Manuel, I do. I'll either look at it and decide to go full size in one trade and the one that looks best, or if they're both compelling trades, then I would half the position size and take both. But I wouldn't, under any circumstances, take the same position size in both trades. My full position size in both trades. If it bounces off of 134, I wouldn't short there, no. I prefer trading with a trend, and this would be picking a top. And historically, I'm not very good at picking tops, so it's not something, you know, I would look at taking. If there are other things there, I wouldn't take that. However, for those of you that do like picking tops, if you get, what would be nice to see here is to see the market get above there on one daily candle, and then the second daily candle to completely reject it. So if we could get a bearish engulfing just around that level there where it pokes through and then engulfs the previous bullish candle. So if we get a bearish engulfing candle up here, that would be quite a strong signal. And actually that was one of the ones that I took at the beginning of the year, but it was very, very similar. It was on the pound dollar. You'll remember it popped up above a big level, about 162, 63 around there. Then we got a bearish engulfing candle, or it was a big pin bar. Anyway, massive signal to go short, and took it short. I came out about 1,000 pips too early, by the way, but hindsight is a great thing, isn't it? But a similar sort of trade there. On the dollar franc and CAD franc, is it not better to trade the dollar franc as the spread is significantly lower? Yeah, I mean, spread is always something that you want to take into account, Manoj, but again, you've got to look at the setup. Having said that, what spread are you getting? Because I don't get that different a spread on those two pairs. For me personally anyway, you know, it's like a couple of pips or something. Which time frame do I use to establish the trends? I establish the trends on either the daily or the 4 hour if I'm swing trading. If I'm doing some shorter term trading, I look at like the hour, the 15 minute, 5 minute, something like that. With regards to Rogers, you do there? Yeah, I mean, I prefer not to trade counter trend, but there are counter trend strategies, yeah, for sure. You know, all of the setups that we teach, so all of the price action setups can be used with or against the trend. The key to what we teach is trading it from a good level. So this would be an excellent level to trade from. So if we were to look to trade counter trend, we would be waiting for a level like this. So an extreme gets up to something like that. You get your signal to enter, much like this one over here on the 19th of June, or the 20th of June. Much like that one there, you would be looking to go short on the break below that. Yeah, Jav, I talk about taking trades on pullbacks, but they're pullbacks in the trend. So they're counter trend, but they're really, really small. They're counter trend on a lower time frame. The higher time frame are always trading in the direction of the trend. Yeah, Jav, the range bar, yeah, okay, you see what I'm saying there. So it's with the bigger trend. The counter trend part is only the swing, not the overall trend. Any other players you want to talk about? Euro yen. I don't actually have my gold on Ninja Trader. I don't have my gold charts up, unfortunately, Giraffe. So I'll pull it up on another platform in a second. I'll just cover the currencies, so then go from there. I don't trade bonds at all. I don't even look at them. What am I looking for? Euro yen. Euro yen. Euro yen. What about using trend lines and fibs for pullbacks? Yes, John, you can use trend lines and fibs. Definitely, I wholeheartedly agree with those. Trade what you see, not what you hear about. Yeah, indeed, Roger. Okay, so looking at the euro yen here, what do we think about this? Well, from my perspective, it's all a bit ugly. From a daily perspective, you are in the midst of consolidation. If you had to pick a direction, obviously you'd pick long. However, even then, It's, it is coiling up here. You would expect another push to the upside, but from my perspective, there's no clear signal there. From a 4-hour perspective, again, you're kind of just oscillating in this little channel here between down there and down there. So ultimately, you're going to want to get above this and hold above that level before you look to take a trade. The reason you asked is that you heard strongly that the euro should drop. I mean, it may do. It may drop a lot. No one really knows that. In all honesty, it's always going to be someone's opinion. And if you take it, you need to make sure that you take it because you want to take it, not because you've heard somebody else saying that this is the latest and greatest next trade. Pound CAD. Let's take a look. Over time, have I become more and more technical based on my trading? Yes. Yes, 100%. My brother and I, we went through kind of different phases in our trading. So we started off technical, then we went very much to fundamentals, traded quite successfully like that for a number of years. However, we then found some flaws with the fundamental approach, mainly timing, entries and exits. So we then started looking at technicals again. And I would say that I'm kind of 80% technical now and 20% fundamental. So what that ultimately means is I'm happy enough to trade a chart blind of the fundamentals. However, if I hear something or if I read about something that makes sense, I'm happy enough to take that into account in the trade that I'm taking as well. Does that make sense? How about you? So where were we? We were looking at pound CAD, weren't we? Okay, pound CAD. We missed the boat there. That was the setup to take over here off of that previous level of resistance there, which was pretty much carbon copy of the pound dollar. It would be, since CAD and dollar are trading very, very closely together at the moment. So that's quite a nice level to take your trade from. We've missed it. At the moment, it's gone quite a long way. So either we want to see another pullback to that level, we want to blast through this high here and then give us another pullback, and then we look to enter. But at the moment, there's nothing on the table for the pound CAD, from my perspective. What sources do we use for fundamentals? I use my brother, because he loves fundamentals. We read the Daily Pfennig. I don't know if you've heard of that newsletter before. It's written by a guy called Chuck Butler at Everbank. It's a nice little newsletter there. And just go on Bloomberg. We also have Trade the News, obviously, throughout the trading day to make sure that we don't trade into something ridiculous. Daily Pfennig, yeah, let me type it in for you guys. I'm not showing pivot points on here because these are longer term charts. So I still take pivot points into account for the day trading, but for the longer term swing trading, it doesn't make any sense. You're always going to be trading into something. So, to answer your question, Roger? No, I've never really thrown the weekly pivot points onto the charts. I'm not saying they don't have merit. It's just not something I've ever done. Maybe I'll do that. Take a look, see what it does. Any other questions? Bassem, thanks for answering. Did I miss a question of yours? Hopefully not. Oh, pound CAD, wonderful. Can you just list the currencies you are interested in at present? Unfortunately, I missed that at the start. At the moment, I'm looking at the pound dollar, the pound franc, the dollar franc, the CAD franc, and the euro New Zealand. Currently, they're the only ones I'm really interested in. No, I don't use the dollar index, John. You can pretty much see it. Because I look at so many different charts, I can see whether the dollar's getting strong or weak just by seeing how it performs against the other currency pairs. Do I think the Aussie is ready to turn? Let's take a look. Give me a sec, just waiting for the Aussie. What, turn to the upside? I mean, I think so. There's no reason for it to turn at the moment. Live, I don't know of one, Manoj, that gives live news releases. To be honest, I don't know of one that gives it for free anyway. Is the Aussie, I don't see it turning to the upside. I don't see that happening anytime soon. I would like to see it come back to this sort of level here, the 93.24, at which point I'd be looking to go short. But as of now, for it to turn and reverse that trend completely, there's nothing really showing that it will do that at the moment. Rand Squawk. Is that free, John? On CS. What does that mean? On currencies. Oh, on capital spreads. Ah, okay, fair enough. So, are there any other questions at all? How's your trading going, everyone? You're looking at the New Zealand dollar. You can pull that up. It's going good. Excellent, Roger. New Zealand dollar. It's trading at an extreme right here. This is a real difficult one to look at. I mean, look at the level you're trading at on a daily. You're at a major decision point in the market. If you're forced to take a trade, you'd be looking to go short right now, I would think. Until it gets above this level here, you need to be looking for short. All thanks to me. Thank you very much, Roger. If you're the Roger I'm thinking about, are you still trading the 2 range charts? They're your babies. You have a 2 range. Nice, John. Roger. 2 range, 1 Renko. Nice. Yeah, there's not been a lot going on, I have to admit. The Tiddlers are for fun. Yeah, snapback is solid. The tiddlers keep you honest, right? They stop you from forcing trades that don't exist. Pound New Zealand. Let's take a look at that. Hello. That's a good point, Roger. Just for those of you that don't know what Roger's talking about here, so he's got his main strategy, which is more of a longer term swing trading strategy, and then he's got a shorter term strategy, which he uses, to keep him interested, to keep him entertained, which actually isn't a bad thing, because you'll find that a lot of the mistakes that you make are because you're looking for entertainment and you're forcing trades. If you actually have a solid strategy which you can use for that, and then another one for kind of really growing your capital, then there's absolutely nothing wrong with that. It's actually probably a very good approach. Okay, Pound New Zealand, again, nothing for me here. It's going nowhere really, isn't it? Pound franc, we spoke about this early on. This is one that we are most certainly looking at. The pound franc, I'm waiting to come back to this level here. If it comes back to the 144.13 level, I am looking to get long. Okay, because if you take a look here, you see that the market is moving upwards. It's coming back to a level of previous resistance, become support. You want to be getting involved in that trade there. Charlotte, it depends. I will place my stop behind the swing. So it really depends where the market decides to turn. If it turns around this level here, the swing point is going to be below, so I'd probably give it a few pips below the round number, somewhere around the 143.95 level. But I want to see the price action there, because I always place the stop behind the swing point. Any other questions, people? Yes, we did talk about the pound yen. I think we said that it's just complete crud at the moment. Let's take a look. Pound yen. There was one. Hold on. Let's bring it up here. Yeah, so very much like the euro yen, is kind of coiling. We would expect another push to the upside. Just when you see where the market's come from, you'd expect it to push from the upside. But equally, if you started to get a turn down, you could look to take the short. And just from the way that I've said that, to be honest with you, that really should tell you that there's nothing on there. If I've said that you can go long and you can go short, it tells you that the market's indecisive. Do you know what I mean? You always go a bit further with your stop further just for some protection. Okay, makes sense. Yeah, Charlotte, I mean, basically I go through all of the charts a couple of times a day. I narrow them down, so as you can, I'll bring up my little, so I have this here, and I'll drag them to my watch list or my in-play part. So the watch list is kind of like, it looks like it's coming back to a good level. Let's see what happens. The in-play is it's starting to react to that level, and let's get involved. That's for the longer term stuff. For the short-term trading, I trade 3 pairs primarily. I trade cable, the yen and the euro. And there I have the 1 hour charts, the 15-minute, the 5-minute, and my range charts. What do ABL mean? ABL? Oh, that's irrelevant. It's just the prices and stuff. Ask price, bid price, list price. But I'm only really interested in the pairs themselves. I can see the price when I get onto the charts. Okay, so that's how I go about my daily routine. I'll check the charts, I'll flick them back and forth between these little things here, and when they come to the in-play, that's when I'm looking at them very, very closely. Any other questions, people? Okie dokie. Well, if there are no more questions, we will wrap it up here. Thank you very much, everybody, for joining. It's been a pleasure, as always. Thank you, Roger. I will look forward to seeing you all next month in September. We'll arrange some dates to get together. Is there anything in particular you guys would like to talk about in the next webinar at all? No problem, Manoj. Nope, no one? Okay. Well, thank you very much, FX Street, for having me. I really enjoyed it, as always. And I look forward to speaking to you all very, very soon. In the meantime, please enjoy the rest of your summer. Let's get ready. Let's get ready for September, for the volatility. We'll do more of the same then, Roger, and talk about my journey as a trader. Yeah, we can do that. That's not a problem. And I look forward to speaking to you all very, very soon. So yeah, keep typing in what you'd like to see there, and I will see you all very soon. Thank you very much for watching today.